I think it's an opportunity for Amazon to gain even more market share, potentially go head-to-head with Target with their announced recent cut on the shipping side, and we'll see what Walmart does. I think the ball is in their court now to react to this. But I think in the long term, what it does is it lets these people that aren't already Prime members experience everything that Amazon has to offer here during the holidays, and probably come January, you'll see a high number of those people convert over to Prime customers.
So after the last quarter, Avery, there were some questions about just how much competition Amazon is facing. Do you think a move like this signals they're feeling the heat?
Absolutely. Historically, Amazon has been able to meet their sales targets without having to go to resort to not sponsoring. To not requiring Prime membership. And the fact that they are willing to forego this, it really signals potentially a real change to their business model. I mean, one of the things that the Amazon bulls have really relied on is that the Prime business model of $120 a year can underwrite a lot of free shipping that allows Amazon to have a competitive advantage versus everyone else. But if during the holiday season, when most purchases are made, consumers are able to get that benefit without free shipping, I think it de-incentivizes Prime in the future.
Yeah, Tripp, I mean, I guess the question is just exactly how much it stresses the overall system, right? I mean, all these companies are stretching and spending a lot of money in a bottlenecked logistics system we have in this country to try and deliver most to the customers. So is it going to end up being just to the benefit of customers, or can any of these companies actually, keep their profit margins up with all this?
Well, I think the profit margins are definitely under fire. Certainly at Amazon, when you saw today Federal Express announcing that they're going to increase shipping across the board 4.9% on the charge on shipping come January. So we see that affecting Amazon. We've seen UPS, and then obviously President Trump's had a lot of comments about the U.S. Postal Service. So again, no one's benefited more from these networks than Amazon over many years, and I think now it's going to be a real headwind for them as they go forward as far as cash flowing revenue to the bottom line.
Avery, does this move make you want to stay away from the likes of Walmart and Target as well because of the competition, or does it suggest they must be doing well for Amazon to have to fight back like this?
Yeah, I actually think that this represents a buying opportunity, and the market's response today with Walmart and Target stocks moving up and Amazon's moving down, I think really speaks to the fact that Walmart and Target are now strong enough to fight back against Amazon, and Amazon's having to go to more and more difficult measures to maintain their momentum, which is fading, right, based on their revenue growth.
Do we know the market share for online shopping? Amazon versus Microsoft or versus Walmart and Target?
Oh, it's dramatically more, right? So they're like about half of online sales are Amazon's, and Walmart's and Target's are much smaller. I think what I really come back to is that Amazon's shipping costs are about 13% or more than 13% of sales. For Walmart and Target, that online sales are less than 20% of sales. So even if their shipping costs are running at the same rate as Amazon for every purchase, they can subsidize free shipping much greater because the economics of in-store shopping is just much more efficient. The reason that Target and Walmart and these big box retailers were created is because the most efficient way to get goods to consumers is through full truckloads arriving at a truck and then the customer shopping themselves, right? And because the cost of capital for Amazon has been virtually zero, that's why this free shipping dynamic has been able to happen, and Amazon stock has been able to do well. But as investors start to realize that they will not be able to gain market share into infinity, and that if the only way to gain share is to reduce the long-term margins of the business, their stock will be under pressure, and I think they'll have to act more rationally with pricing. You're already seeing this. For example, if you wanted to buy pancake mix, Annie's organic pancake mix, what comes up on Amazon is you have to buy 8 boxes together. They're over $5 a box. On Target's website, you can get them for $3.50 a box. We're already seeing that Amazon is raising prices to accommodate this free shipping, and long term, the traditional retailers are just have much better structural advantage.